Well, a very warm welcome to the brand new edition of Policy Watch. I'm Kriti Mishra. A committee formed by the Reserve Bank of India to look for the development of the housing finance securitization market submitted its report to Governor Kant Das. Key recommendations by the committee include setting up of a government-sponsored intermediary through the National Housing Bank to enable market making and standard setting, developing standards for loan origination, loan servicing, loan documentation and loans to be eligible for securitization, including standardized formats for data collection and aggregation, are some of the important suggestions. The report is placed on the RBI website for comments of stakeholders and members of the public. Comments on the report may be sent by September 30th. And to get deeper insights on the topic, I'm joined by Mr. Banuchandar Nagarajan, former consultant, World Bank, Mr. Subodh Kaushik, former General Manager, Punjab National Bank, and Mr. Kamla Pandey, Professor, Urban Management, Indian Institute of Public Administration. Welcome to Atsaba Television, all of you. Mr. Kaushik, let me come to you first. And let's get to the basics. Tell us about the securitization mechanism to enhance the pool of resources for housing finance companies.
See, there are various players in the market who are involved in the housing finance. Now, when you look at the housing finance companies and the banks, the housing finance companies have the limitation of having the funds because no more the public deposit taking companies are in vogue. Therefore, they need finance coming from the banks. And when they are financing in different areas of the country, they have their book built up over a period of time. Now, the securitization is a process by which they are able to pool these assets together and sell it to a bank or another financial institution, thereby freeing up fund for further financing. Therefore, it makes the housing finance market more vibrant. Public will be getting the facility of housing finance through various channels, and it will facilitate the housing finance market in the country per se.
Right, sir. But talking about the report now that was submitted to RBI, Professor Pandey, tell us what are the salient features of this report, important suggestions of the report on housing finance securitization market?
The report has been prepared very timely because there is a need to enhance, accelerate the supply of housing if we have to achieve the national objective of $5 trillion economy. Because housing has multiplier effect on income. The income multiplier is 5. If one person is employed directly in housing, 8 are employed elsewhere. 6.8% of total workforce is employed in housing. 99% of those who are employed in housing directly belong to poor and informal sector. So, it has very wide implication for the national economic development. Second, currently we need 8 to 10 crore houses by 2022, which is the target of the government. For that we need 100 to 115 lakh crore, which means nearly 35 lakh crore total money. The total outstanding loan of all the housing finance institutions given to borrowers is about 17 lakh crore. So, there is a huge gap of requirement of funds, and that cannot be achieved with the current system of banks, commercial banks and housing finance institutions, because they have access to a savings bank account, FDs and refinancing from NHB. We need securitization so that a larger pool of fund, a larger liquidity is available for the banks. So, in this context, the committee has suggested a three-pronged strategy. One is the originator, the banks who have given loan. Second is the investor who will provide funds, who will buy the mortgage-based securities. And third is the facilitator, which is one special purpose vehicle to be created by NHB, National Housing Bank. And they have listed a range of actions to facilitate these three stakeholders to accelerate the supply of funds for housing. And those actions include standardization, as you said, of registration, loan documents, exemption of stamp duty and registration fee for the originator. Then 5% of contractual funds from provident fund and insurance should be made available for buying the mortgage based securities. And then listing of more than 500 crore investment in the market, in the primary capital market. So for the investor, and facilitator should also be given the instrument of SARFAESI Act, so that the asset liability mismatch is maintained.
We'll get into all these highlights in just a bit. But coming to you, Mr. Nagarajan, a very important suggestion made by the committee was to set up an intermediary by the National Housing Bank in which the government could retain around 51% ownership. Now, what would be the functions of this new organization?
This was a lesson that was learned from the financial crisis that happened in the US. Okay. So what happened during the 2008 crisis was there were these government-run agencies called Freddie Mac and Fannie Mae, which actually guaranteed loans, guaranteed mortgages, right? And actually they sold the papers to other investors as securities. But when they were doing it, they were doing it at an arm's length distance because they didn't have the contact with the actual person that was getting the mortgage, right? The banks get the mortgage and they got the security papers from them and passed it on. Okay, so this created a systemic risk that actually brought down the whole financial system down. So to have some skin in the game, the new regulator or the new entity that is being proposed by the committee is intended to have at least 5% stake in the securities that they actually are selling. Okay, so that they don't do it recklessly. They have skin in the game. For that, to get this 5%, they need some money, right? That's why the corpus of 500 crores is being allocated. So this will be placed under the NHB, right? The entity that is going to be set up will not only invest this 5% security, but actually build the whole market of securities. Okay, so the market, what does building of the security market entail? First is actually stamping these securities, clumping these securities of different nature based on the loan value, based on the borrower profile, so on and so forth, and then selling it to various players like mutual funds or pension funds, so on and so forth. And also kind of providing a whole set of information for various players to participate. For example, information should be available for everybody so that there is no information asymmetry. And people, when they buy, they have all the information when they buy. Second is since they are a little away from the actual banks giving out loans, they actually want to set up specific mechanisms for gathering data. So there are many activities that have to be carried out by this entity. But very clearly they have learned their lessons from what happened in the US in 2008, and they're making sure that the mistakes won't be repeated.
Absolutely, that's a very important point that you're making. But coming to you, Mr. Kaushik, the committee also said that this intermediary should be commercially sustainable and should not threaten the stability of financial markets. Could you elaborate further on this suggestion?
You see, it is very, very important that this entity remains up and running. Now, the basic necessity is that the quality of the pool, asset pool, remains good, and for that the basic parameters have to be looked into. You see, one thing which has changed from our previous experience is that after 2016 demonetization, the amount of cash which was actually involved in the transactions of real estate, whether you are buying house or whether you are buying land, there used to be a very big portion of cash. Now going forward, that cash element is almost becoming negligible, and in the coming time it is going to be zero. Looking to that, there was a certain cushion available in Indian market, and Indian market did not suffer the same consequences which other part of the world suffered, because we had a inbuilt margin. and therefore there was more intrinsic value in a property than which was visible. Going forward, this has to be seen that now the actual value and the intrinsic value are going to be nearer, and there will be hardly any difference. If you are having a upswing in the market, maybe you will have some little bit of extra intrinsic value, but nevertheless that cushion part now is going to disappear very soon. So when we look at the valuation of these things and we look at the role of the agencies which are going to rate these securities, becomes very crucial and critical. So regulator will have to keep a hawk's eye on these agencies, that they do their job and they don't repeat the same mistake which was there in 2008, which caused all the crisis in America.
Absolutely. So the regulator will have to keep a hawk-eye vigil. But Professor Pandey, when we're talking about the securitization market, tell us about the importance of a well-developed securitization market for alternate source of funding for home loan lenders.
Alternate source of funding would be one is the mortgage-based security, which will be made available through this intervention of entity created by NHB. And there is only one thing very good which needs to be noted is that in 2018, for the first time, we have achieved double-digit ratio of mortgage to GDP. For the first time, 10%. Now we have 10% share of mortgages as compared to 56% in US and 67% in UK. So there is a need to have a quantum jump in the incidence of housing loans if we have to achieve overall economic objectives. And for that, this mortgage-based security system will go a long way. And this report also suggests that over a period of time, the share of 51% equity from NHB should be reduced to 26%. And other multilateral institutions and other foreign concerns should be involved in this. So the equity participation from others will be one important route to enhance the availability of funds.
But also, Mr. Nagarajan, the committee suggests that the centre must exempt the mortgage-backed securitization from stamp duty on lines of asset reconstruction companies. What would be the impact of this particular suggestion on the housing funding space?
See, the suggestion is intended towards expanding the market, okay, to make the securitization, the security market very attractive. So what is the need for making the security market very attractive? See, right now, the total housing market, the size of Indian housing market is around like 150 lakh crores, okay. As Professor was pointing out, like the next 3 years, like we are looking at 115 lakh crores, okay. Basically, like almost like doubling the market in 3 years. So if you need like this much infusion of funds, it has to come from outside, okay. And securitization is a way of getting funds from players like the pension funds, the mutual funds, banks, so on and so forth, that can actually like infuse funds into the housing market, which otherwise like the funds of the banks gets locked in the housing loan, right? So if you look at if you break the housing loan, the mortgage market, right now it's 20 lakh crores, of which around 58% or 11.5 lakh crores is financed through banks. The rest is through housing finance companies. Even under the 8.5 lakhs, if you look at it, 85% are from the top 5 companies, okay, top 5 mortgage companies. The rest is actually by like the rest 90 to 85 to 90 housing finance companies. There is a catch here. See, the big housing finance companies, they actually cater to the middle income segment and even the lower income segment. But what you're looking at for the next 3 years is more housing for the economically weaker section and the low income section, right? For these guys, the financiers are the smaller housing finance companies. They do not have recourse to funding other than going back to banks or getting refinanced through the National Housing Bank. For these guys, the securitization becomes a very important and very significant tool. So once these guys have more liquidity through the securities, they can actually go ahead and lend to various various people of various I mean especially the lower economic strata people. There is also a urban-rural divide among the housing loan products. Housing finance company penetration is around like 50% or 47% in urban areas, but it's only 10% in rural areas. Once these smaller finance companies, housing finance companies are empowered, when they have adequate capital, they will actually go ahead and find new customers in say rural areas, among the urban poor and so on and so forth. So this is going to be the thrust for the next 3 years, and for which we need securitization, without which we can't actually achieve these ambitious goals.
And how will NHB establish loan origination standards, particularly in the affordable housing segment?
See, actually, like the report beautifully points out about 3 kinds of data that actually has to be captured. Okay, one is data about the person getting the loan, data about the loan per se, data about the property. So once these data sets are standardized, okay, then it becomes easy for like people to accumulate loans together. For example, like I mean, loans from like 2 different branches of the same bank might have like different kinds of data collection process, which makes accumulation, which is, see, what is securitization? It's like pooling of similar loans, right? Like once we get proper data, this pooling process will be easier. Okay, so that is what is recommended by this report.
Let me take that to Mr. Kaushik. Mr. Kaushik, importance of loan origination standards according to you.
Yeah, it's the most critical part. Basically, loan origination, at that point we are capturing all the data about the borrower, about the property, and now with the technology at our command, we can improve it many folds. For example, the SARSAI was started. Now SARSAI is going to be one standard where every single property mortgage would be registered. So it will be easy to check that this property exists at what address, what size, who is the owner. All these things are very transparently available on a single portal. Similarly, there would be a geotagging, and that will help the exact pinpoint location of that particular property. It will also be a requirement that multiple registration of the properties has to be stopped. So there has to be a single source of truth. So for each place there has to be a centralized registration process, so that any property purchased in a town in any section gets registered at the same place. So these are the things which mean that we need to have a standardization in origination process itself, so that whatever data is captured, as Mr. Nagarajan has really mentioned in the right perspective, is that we need to know that how we are looking at a particular pool which is similar in nature. So homogeneous group can be identified only if we have the right kind of data, and this will help in capturing the data in a standard format, which will make it possible to actually provide the right type of data
and make the entire process seamless.
Make the entire process seamless.
Professor Pandey, countries where we've had well-developed securitization market, that shows that securitization tends to be counter-cyclical. Any specific lesson for India?
Our the experience on this will now start. So we have to be careful to see that securities are taken with all sorts of backup with data and other support system. And in this context, real estate regulatory authorities, each state has. In fact, some states are doing very well, in like Maharashtra, Tamil Nadu, Rajasthan. So they also have developed a sort of data for new houses. So there is a need to coordinate with the RERA, which is already existing system, to check the any mistakes and defects which may affect the securitization. So a well-developed database could be accessed through real estate regulatory authorities.
Mr. Nagarajan, you wanted to make a point on this?
It's actually important that we have proper data. It is because like nothing. It is data is the best disinfectant, right? So once we have a data that is available with every layer of this process, from originating to the National Housing Bank and the entity that is going to securitize, and even the investor. So there is great amount of trust that is built, and also like people can make right choices. So when we don't have proper data, the risks get misallocated. That's where the whole problem starts. In fact, that was the problem in the US as well. Like, I mean, people were actually like getting subprime loans. People who cannot pay, they are actually called ninja, like no income, no job, no asset people, right? But when the securities were made, okay, they were actually like sold as prime certificates, okay, AAA rating with the help of credit rating agencies. And this was brought by pension funds that are run by teachers pension fund, employee pension funds, so on and so forth. So the Dodd-Frank Act of 2010 was actually created to solve these systemic risks and look at these specific problems that is undermining the whole system. So the people that have written the report, the authors, they have actually like delved into it pretty deeply. They've also looked at examples from Korea, from Malaysia, and so on, and they have come up with a quite comprehensive report. So and they have made clear distinctions between like the direct arrangement method that is being followed, and also the pass-through certificate model that they are proposing. And the pass-through certificate model is like at its infancy in India. So once we actually have a very well-established market, and they actually recommend that this market be established very fast, and they have actually a list of regulations that need to be made, and so on. It's quite comprehensive. Once this is made, then actually we can move quite fast with the development of this whole mortgage market and security market. Not only will these help in getting the housing for all scheme going, but also like to give fillip to our economy in terms of jobs and everything. It actually will be very important.
You made a very important point that was about housing for all. Now, this report has also pointed out that by the year 2022, we'll need more than 80 to 100 million additional housing units. How do we expand the capital base?
So yeah, for the 10 crore, 100 million houses that we need around like 115 lakh crore. So the nature of the housing business is like this. For example, if you're a bank, okay, once I give you like the 40 lakhs that you need for your house, that money is stuck, right? Like I don't have enough capital. So once the securitization business happens, the people buying the securities will actually replenish the 40 lakhs. So I can go and give more loans. So that is the whole business, right? So the capital that's available with the bank is expanded. So that is why it has a multiplier effect. And also like this securities will be available only for people with the correct risk appetite. So at least that's what they are looking at it right now. Maybe they'll expand it later. So this is a very well thought out, well organized system. So once the money from securitization starts pouring into the bank and the housing finance companies, the whole liquidity situation in the market will improve. So which is actually being threatened right now because of the non-performing assets problem that we have. So I think like this is probably the correct time also to like introduce this legislation, to make this report, the recommendations of the report come true.
Mr. Kaushik, I could see that you wanted to make a point. I have last 30 seconds.
See, the steps taken right now and the recommendation made by the committee are on very positive side. They have looked at the global experience, and what they have recommended looks to be the best practices. Now, there is always a risk of implementation. So let us have a hope and belief that we will be able to implement this in the same spirit, and if it comes through, this will be really wonderful for the uplifting of the economy. As Professor Pandey has mentioned, it has a multiplier effect, and it will definitely help grow the market, and it also make us achieve the dream of house for all by 2022.
Absolutely. On that note, thank you so much for joining us on this discussion. So the key recommendations of the committee are guided by the broad perspective of enhancing efficiency and transparency of securitization transactions. Well, that's all we had for you in this edition of Policy Watch. Thanks for watching and stay tuned to Rajya Sabha Television.